It is the second trading day of the week. We are counting down to the monthly expiry. There is a lot to talk about today. You're watching Power Breakfast on CNBC TV 18. We'll bring you all of that in the next 30 minutes. I'm Hormuz Patakia. With me, as always, is Vamakshi Doria. Vamakshi, good morning. It was a good session yesterday, and the bulls will look to build on to that momentum today.
Well, absolutely, Hormuz. Apart from the monsoon grey, the Monday blues, we did have a green-looking screen, so that did bode well. But let's see what today's session holds out for us. Let's get started with the top headlines then. Asia-Pacific markets opened mixed as investors continued to assess trade and tariff-related developments. GIFT Nifty 2 indicates a flat start for the Indian market.
Oil prices are holding steady as market awaits clarity on OPEC Plus's next move with the meet planned on the 31st of May, while gold prices have declined after Donald Trump extended the tariff deadline on the European Union.
Market regulator SEBI seeks proposal from BSE and NSE on the finalization of expiry days by June 15th. SEBI has retained its stance to keep one expiry a week per exchange, falling either on Tuesday or Thursday.
Indigo promoter Rakesh Gangwal is likely to sell more than 3% stake in the company through block deals today. Sources are telling CNBC TV 18 that the floor price is at a 4% discount to yesterday's close, and Gangwal is hoping to raise more than 6,800 crore rupees.
Kochi and 10 other districts in Kerala remain under a red alert as heavy rains continue to wreak havoc. The IMD has warned of heavy rainfall with thunderstorms and gusty winds in Mumbai and neighbouring districts of Thane, Raigad and Ratnagiri.
Well, lack of cues coming in from the US because the markets were shut over there yesterday, but the Dow futures are trading with healthy gains as they were in yesterday's trading session as well. So mostly it's largely priced in, and the Asian markets too have opened up on a slightly subdued footing in today's trading session. The Hang Seng absolutely at the flat line, as is the Taiwanese index as well. So no significant directional movement that is coming in from the Asian markets. The Nikkei 2 is down 0.25%. The Kospi in South Korea is down 0.5%. So it's a largely subdued looking screen on the Asian markets as well, especially considering cues from the US were absent. If you pull up the GIFT Nifty as well, it'll give you an idea of what our markets are likely to start off with. And after a strong move on Friday, building onto that in yesterday's trading session, despite the fact that there is some resistance at higher levels, the implied open is also suggesting a similar sort of a start is what the Asian screen is also mirroring as well. But a strong futures market is what we are seeing on Wall Street as of now, Amakshi.
Well, absolutely. Hormuz, yesterday, of course, the US markets were closed, so it's important to look at what the futures are doing. The stock futures on Wall Street jumped on Monday night after US President Donald Trump said over the holiday weekend that he has agreed to delay tariffs of 50% on the European Union. The Dow Jones futures added nearly 1%, while the S&P 500 futures too added 1%. The Nasdaq 100 futures climbed a little more than 1%. But Hormuz, how did the European markets do then?
No, it was expected that they would rebound considering the fact that they fell on Friday after Donald Trump's tariff threats, and yesterday when he withdrew that threat, the European markets did well for themselves. The CAC was up 1%. The German DAX also was up almost 1.75%. All of the auto stocks that fell on a Friday's trading session, they were the ones that saw a rebound, including Stellantis, and all of those names trading anywhere with gains of 3 to 5%. The UK markets were shut for a public holiday, and the Pan-European Stock 600 also ending with gains of 1%, and all the sectors on that index closed in the positive territory. So that's all we have on the global market front. But how will all of these overnight cues impact our own markets? Our research team is now joining in with the trade setup, stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. First up, Vinny joins in to get all the market cues we need to watch out for today. Vinny, a subdued start is in the offing, but the bulls will be confident that we are close to 25,000.
Hi, Hormuz. So good morning. In terms of what we're watching out for from the Indian markets today, positive momentum, obviously, we are hoping that that continues. Yesterday also, we saw an up move coming in. Nifty closed about 25,000 levels. The rise that we saw coming in for the Sensex as well, 455 points higher, ending at 82,176. And Nifty Bank, a bit of an underperformance versus the benchmark indices, but still closing on the positive footing, 174 points uptick that we saw coming in for Nifty Bank. Top sectoral gainers yesterday were auto as well as IT, which were buzzing underway in trade. And in terms of what we saw coming in from FII and DIIs, FIIs were buyers as well in yesterday's trading session. 135 crores is the buy coming in on the FI front, and DIIs bought around 1,745 crores. So that buying has continued from both FI as well as DII front. Now, what are we watching out for, or what is the factors that would impact the market today? Earnings reactions will come in for most of these stocks like Aurobindo Pharma, KEC International, Shilpa Medicare, among some of the names. And there are earnings that are expected today like LIC, Hindustan Copper, NMDC among the important ones, which could see a bit of a specific move on the back of its earnings. Investors are also awaiting economic data we'll see coming in this evening in terms of from the Europe as well as the US side, so keep an eye out on that. Nifty implied open as of now is indicating a very muted start coming in for the market. It's flip-flopping slightly between the red and the green, so muted start is what we should watch out for.
Hoping for a muted start indeed. Vinny, thanks a lot for that. There are plenty of stocks to watch out for, earnings reactions, offer for sales, block deals, and Vamakshi will take us through all of that. Vamakshi.
Well, absolutely, Hormas. Today will be dominated by a lot of earnings and a lot of block deals. Let me first start off with Aurobindo Pharma. Revenue saw an uptick of almost 10%. This was more or less in line with what the street was anticipating. The margins have declined to 21.4%. This is below what the street was expecting, and the net profit too is rather flat at 902 odd crores. KEC saw a revenue growth of almost 10% in FY25 as a whole, as compared to its guidance of 12 to 14%. So they've missed the guidance as far as revenue is concerned. Margins came in at 7% for the whole year, which is at the lower end of their guided band of 7 to 7.5%, and the order book saw an uptick of almost 13%. PTC India is the next counter I'm watching out for. The margins here have contracted to 7 odd percent. The net profit though has seen a substantial jump to 343 crores, and this is because the net profit included a one-time gain on divestment of PTC Energy to ONGC Green. Shilpa Medicare is the next counter we're watching out for. Remember, in yesterday's trading session, the stock was surging higher. Margins have declined for the company to 23.2%. The net profit too is seeing a very sharp fall of almost 41%, given that there was an exceptional outflow of almost 28 crores. Schneider, on the other hand, revenue saw good uptick, 24% on a year-on-year basis. In fact, it is the highest growth that we've seen since the third quarter of FY24. The margins are down. The net profit, although has seen a very sharp jump, has come up to 55 crores, and that is because the base quarter has some tax adjusted related expenses. Sagility India is the next counter we're watching out for. Sagility BV is likely to sell up to 15% equity of the company via offer for sale. Keep an eye out on Indigo as well as PG Electroplast. There could be some selling pressure out here as well.
Indeed, we keep an eye out on all of that. Vamakshi, lots of stocks to keep an eye out for today. And lastly, Mangalam joins in with cues from the F&O space, counting down to a monthly expiry. Mangalam, good morning to you. What's the F&O data indicating?
3 days to go. And if you look at the big move that we saw yesterday, Nifty was close to around that 25,000 mark. The Nifty Bank also moved all the way up to closer to 56,000 before it saw a bit of a sell-off. The mid-cap index would tell you that their portfolios are feeling good. Two sectors that did well yesterday. The Nifty IT maybe because of, the delay in tariffs on Europe. And then we had the Nifty FMCG index. Early onset of monsoon, good going for rural economy and good expectations for urban economy as well. The India VIX was higher even as the market was higher, and that told you that there was supply at higher levels as well. So we're entirely not out of the woods. But more importantly, yesterday we had pointed out that maybe the FI volumes would be lower because of the US market being shut, and that's exactly what took place. 136 crore worth purchase, gross volume slightly lower. DIIs actually went ahead and bought about 1750 crores. But the FIs bought a little more in index futures. Yesterday the purchase was 565 crores. They added close to 6,000 long and added 3,000 short contracts. So the net longs actually increased. And that's actually something that has happened for the last 3 trading sessions. The chart comes up for you on the screen, and you would see from May 22nd to now, the longs have increased from 32% to 35%. And the net contracts have seen a decline of almost 5,000 contracts. But 25,000, that still remains the fulcrum. 25,000 call and the 25,000 put are most active ahead of expiry, both of them having a premium of roughly 200 rupees each. And that tells you that the option writers for this month's expiry expect a range on the lower end of 24,800 for the Nifty. That's where support comes in. At the higher end, the resistance comes in at 25,200. All of this is determined by the Nifty Bank, which is actually in a broader 1,000-point range. At 55,000, you have the 20-day moving average. And at 56,000, a little over 56,000, you have the all-time high coming in as well. The one stock I'm watching out for is Dixon Tech. It's out of F&O ban, so keep an eye out on that one.
Well, thank you so much for that, Mangalam. But moving on then, Rajiv Jain of GQG Partners' latest bets include HDFC Bank and Bharti Airtel with worth $2 billion and counting. Listen in to this conversation he had with my colleague Prashant on CNBC TV 18 Prime.
Yes, so HDFC Bank, we thought was going through a sort of integration transition period as such between the two, HDFC and HDFC Bank. So since last September or thereabouts, last quarter last year till first quarter, we put almost $2 billion in HDFC Bank. And Bharti we started buying early last year, and then we have doubled down again this year. We've added a little bit to some of the other names too, nothing meaningful, but they're like a few $100 million here and there, nothing meaningful. So these are the two big positions, the other ones we quite like. I mean, you have public information on that. So because we're still very bullish on the utilities/infra type assets, we still like real estate. So and what's interesting, we feel this time around is that seems like, and for good reason, the rally seems to be led far more by large cap than mid cap. Mid cap are fine, but the valuation is less supported than a large cap, and large caps are now transitioning from, they've digested last few years for different reasons. And a couple other names, by the way, we just started, we recently initiated, so we were active, we can't talk about those. Again, large cap. So we feel that the large cap space looks fairly interesting, actually.
Okay. And the way the portfolio here in India is constructed, it's still, I mean, the trust is still industrials, infrastructure. I mean, if you were to sort of look at it by weightage, would that be correct?
Yeah, so if you look at it, it's not exactly precise, but banks is a big exposure, as you know, with now 3, ICICI, HDFC, and State Bank of India, so all 3, they're pretty meaningful. And then you get the infrastructure/utilities, because one thing I found fascinating is that utilities globally tend to be defensive. For some reason, these stocks are less defensive. I don't know why, but they're less defensive in India, but they have far more predictable growth because the rollout is happening, and that's probably half of our book. When I say utilities, infra combined, and then you get then you get 2 staples. I mean, ITC and Patanjali,
right.
And then rest is sort of mixed match of some smaller positions.
Well, as we slip into a break, we're excited to unveil our brand new global business news channel, the all-new CNBC TV 18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV 18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights into CNBC TV 18. Tune into CNBC TV 18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, in a circular shared last evening, the Securities and Exchange Board has asked exchanges to apply for equity derivatives expiry by June 15th. SEBI stated that each exchange will be permitted only one benchmark index options contract to expire on either a Tuesday or a Thursday. Currently, the NSE has a weekly F&O expiry on Thursdays, while the BSE holds its expiry on Tuesdays. Well, moving on then, online investment platform Grow has filed confidential papers with market regulator SEBI for an initial public offering. Sources have told CNBC TV 18 that the IPO size is likely to be between $700 million to $1 billion and will comprise a mix of fresh issue and offer for sale. The proceeds of the IPO will be invested in tech development and business expansion.
Well, now the new invoice management system under GST has irked India Inc. Now, sources are telling CNBC TV 18 that the industry has flagged its concerns about additional compliance burden to the government. Now, Timsy Jaipuria is here with more on this. Timsy, what are your sources telling you?
Well, that's right. Sources have told CNBC TV 18 that the new invoice management system, or the IMS, under the GST regime is causing additional compliance burden for the taxpayers. Industry, in a detailed representation, has mentioned that the new system design assumes auto-replication, reconciliation of transactions across GSTR forms, and considering that most companies' processes are through manual operations, The new system would not just mean additional infrastructure, a minimum requirement of a qualified CA, a 24-hour software and internet connection, and basic backbone, that is the IT backbone, which will be required, adding to the burden. Also, the representations outline that most companies use basic accounting software that don't allow auto-matching of sales, purchases, ITC transactions across GSTR forms. And as per the new invoice management system and the design, if it sees any mismatch or break in the transactions in the GSTR forms, it will raise a red flag, which will alert the GST and income tax authorities for action, and it could lead to companies and taxpayers getting not just a GST but income tax notice as well. That is for the transaction reconciliation mismatch due to the new invoice management system and design. Further discrepancies have been flagged by the industry due to the new IMS design system, which says that it compresses correction window, blocks ITC credit, and thus problems arising due to the new IMS design are adding to compliance burden, hitting working capital, along with the most harming impact, which is that the assumptions that will be made by the authorities during these mismatches, which will be noted, and it increases the risk of dual taxation. Now to be seen is how the government and the industry battle this out.
Timsy, thanks a lot for that update. Take a short break. On the other side, get you cues from the commodities market. Stay tuned. Welcome back. Now getting you the latest on the developments related to US President Donald Trump. Dia is joining in our special segment, Trump Watch.
President Donald Trump threatened to divert billions in grant dollars away from Harvard University and give those funds to trade schools across the U.S., escalating his clash with the institution. Trump said in a Truth Social post that he is considering taking $3 billion of grant money away, adding that it would be instead a great investment for the U.S., which he claims is badly needed. As trade tensions ease on one front, the European Union is signaling its willingness to fast-track talks with Washington. EU leaders said Monday they are prepared to accelerate negotiations with the United States in an effort to avoid a full-blown trade conflict, just days after Trump accused the bloc of dragging its feet and exploiting American interests. Moving on, North Korea has slammed US President Donald Trump's Golden Dome missile shield plan as a very dangerous threat that aims to weaponize space, state media reported Tuesday. And finally, in a move with symbolic significance, King Charles III arrived in Canada to open a new parliamentary session at the invitation of Prime Minister Mark Carney, a move designed in part to send a message to US President Donald Trump about the northern country's sovereignty. That's all for today. Now back to you.
Well, thank you so much for that, Dia. But, 2 days after hitting Kerala, ahead of schedule, the southwest monsoon marked an early arrival in Mumbai on Monday, the earliest recorded onset in the past 75 years. The IMD upgraded its forecast to red alert, warning of heavy rainfall with thunderstorms and winds in Mumbai, along with the neighboring districts of Thane, Raigad and Ratnagiri. Data from the BMC indicates Narman Point, Baikala and Kolaba recorded over 200 millimeters of rainfall between Sunday night and Monday morning. But that's all on the weather front. But what's happening in the world of commodities? We now have Manisha Gupta joining in with all the updates from the commodity space. Good morning, Manisha.
Morning, and thank you for that. I'll start with the crude oil prices, which are holding gains ahead of the OPEC and allies meeting, which is on 31st of May. Apart from that, it also is about U.S. extending, as you've been mentioning, deadline for reciprocal tariffs of 50% on European Union. The U.S. president also has said that they are considering sanctions on Russia. That seems to be adding some premium to prices as well. And then there is a report from Baker Hughes which says that the operating oil rigs in U.S. have declined by 8 to 465. This is now the lowest since November 2021. So that seems to be adding some support as well. What has seen a decline, though, has been the gold prices after U.S. announced extension to the EU tariffs. Also, the markets are looking at some kind of a redemption in the U.S. gold ETFs, which have seen a decline for the last 3 straight sessions now. But apart from that, everything else seems to be supporting gold, whether it is about the widening U.S. budget deficit, geopolitical tensions. The markets also are looking at decline in U.S. dollar index, and a very strong Citi report which says that they have revised their short-term gold target to 3,500 yet again, and they're looking for gold to consolidate between 31 to 3,500 in the days to come.
Range-bound gold, but not cheap by any means. Manisha, thanks a lot for that. Now on to some international updates. Palestinian officials have confirmed that Hamas has agreed to the ceasefire proposal put forth by US Special Envoy Steve Witkoff, paving the way for a possible end to the war with Israel. Now, the new proposal will see release of 10 hostages, 70 days of truce, and partial withdrawal from the Gaza Strip. Now, a number of Palestinian prisoners will also be released by Israel. However, there was no immediate comment from Israel regarding the ceasefire proposal.
Newly crowned English champions Liverpool's title celebration came to a somber end as a car plows through fans, leaving dozens injured. Merseyside police arrested a 53-year-old British man shortly afterwards. The incident left 27 people hospitalized and 2 seriously injured, but the police is not treating it as a terrorism-related incident. UK Prime Minister Keir Starmer offered sympathies, calling the scenes appalling, and said he was being updated about the events. Liverpool last won the Premier League title during the COVID-hit 2020 season when celebrations were not permitted due to lockdowns. The team said on X it was in direct contact with the police.
And with that, we call time on this edition of Power Breakfast. From Amakshi, me and the team that put this show together, thank you so much for watching. But don't go anywhere. Bazaar Morning Call on the other side to set you up for today's trade.